SP Tulsian and Dilip Bhat of Prabhudas Lilladher are also with us. Good afternoon, gentlemen.
Let's get another view into this. Dilip Bhat of Prabhudas Lilladher is also joining us. Dilip, you must have heard Mr. Tulsian's argument. What's your own view? Because the stock is up almost about 20% right now. The question everyone's asking is, why did BNP Paribas sell out so cheap? But on the flip side, Shrey Infrastructure not only got a good deal, but they also have BNP Paribas as a 5% stakeholder in the parent company now. What would you advise retail investors to do with this stock?
I think Tulsian has given a very good perspective about all the angles. But a couple of points that I would like to add. I think this equipment finance business generally across for most of the other companies has been a very tough business. And possibly this tough conditions possibly is going to last for another couple of quarters. So from SREI's point of view, probably they are acquiring at a time when there is a cyclical downturn and probably it is at its bottom. So for them, it makes a very proper sense, and definitely it's a sweet deal for them without any doubt. But as the question does come that why does BNP have to sell it off so much in a hurry? So my own estimate would be that somewhere, on an overall basis, on an international basis, some of these banks have their own compulsions by which they need to sell off some of the businesses where they probably don't have a major say, or probably they are not likely to be much more interested. So that could possibly be one of the arguments. But surely this is a business where the NPAs are much more daunting at the moment, and it is not just for this company, but across all the companies in this particular sector. My own take is that yes, for SREI and the shareholders, it certainly means that it's a very good deal, and probably in the long run, it will benefit the SREI shareholders. Corporate governance and all those issues will definitely be raised at any point of time because there's not much transparency. So my own suggestion would be that if you're a SREI shareholder, definitely you must hold on for the time being. And I think by holding 5% stake, they are also trying to say that, okay, we repose the confidence in the SREI management.
Okay, so by holding 5% stake, the BNP does repose the confidence in the management. Also, you have, now the profits of SREI BNP that were to the tune of about 150 crores in FY15. Now, since SREI has bought back that stake, there will be that additional 75 crores as well. For investors who don't have this stock yet, Dilip, does it make sense to buy at 60 rupees, or would you be cautious?
Well, I think as far as SREI is concerned, it's certainly not in our detailed coverage, so it's very difficult for me to take a fundamental call on SREI. But broadly, from whatever I've met the management, I think they really know their business, how to do it. And maybe just on a macro helicopter view, I would say that SREI would be a good long-term bet to invest, given that the overall climate is changing in the infra space.
Talking about some of the other large caps, Dilip, this month we've seen a lot of the pharma stocks see a good recovery. So Sun Pharma is actually one of your biggest gainers this month, up more than 11%. If you had to pick one or two pharma stocks to put money into now, which ones would they be?
I think if you were to really want a little more proactive returns, I think Aurobindo will rank very high because that's one company where there's still a fair amount of disbelief in their numbers. Because if you see, they're still notching up about 35% ROE. They are still available at around 20 PE. And more important is that this year, possibly they will touch around 2,200 crores of profit. And yet the stock is available on a relative basis much more cheaper than most of its peers, and will continue to see the growth over next 2 years. So I think Aurobindo Pharma will rank pretty high in that. And I think apart from that, possibly something like, I would say Dr. Reddy's, which has really taken it on the chin post whatever that has happened from the US warnings. I think that's another stock which on a resilience basis and on a risk return basis, I think it would also rank pretty high in terms of investments.
Okay.
We head into the break. I just wanted one more comment from Dilip on a conversation that we had earlier in the day with Ashok Leyland. Dilip, Ashok Leyland was telling us that in the years to come, in the next couple of years, there is a growth of 20, even 25% expected in the commercial vehicle sector. And Ashok Leyland has been gaining market share. Is this a space that you still like, and is there still value here?
Very much. I think the entire cost dynamics is turning out in favor of the auto industry. And we are on the cusp or the inflection point as far as the recovery is concerned. And probably since this recovery is largely going to be led as what we all think it's from the infra sector. And also as and when the GST gets passed, I think it will all add to it will provide a solid tailwind to the demand for the commercial vehicle sector. So I think, yes, we do share the optimism, but I'm not sure whether I expect 20-25%. But yes, I think on a steady state basis, around 12 to 15% volume growth will be sufficient for the stocks to really show a very good appreciation.